Hey everyone, welcome back to Corporate Decoder, the place where we try to unravel the mysteries behind those official company documents. Today we're diving into a filing from Venture Global Incorporated, a company that is quite literally building the future of energy infrastructure. Get ready because we're about to decode a significant financial move that could reshape their operations and possibly the energy market itself. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss these kinds of filings. Venture Global Incorporated is reporting on some really big news. It looks like they've secured some serious financing for a major project. This isn't just a small loan, this is a multi-billion-dollar credit facility. Think of it like this, they've basically lined up a huge bank account to fund a massive undertaking. This filing details a new set of senior secured credit facilities for Blackfin Pipeline LLC, which is a joint venture between Venture Global and another company called Whitewater Development. These facilities total a staggering $1.55 billion. That is a lot of money. This is a single loan, but rather a package of three different types of financing. First, we have a term loan facility, or TLB facility for short. This is a big chunk of change at $1.050 billion. This money is meant for the main costs of building and maintaining a huge natural gas pipeline. This pipeline is not small, it's going to connect different parts of Texas spanning from Colorado County to Jasper County. Imagine a superhighway for natural gas. Then there is a delayed draw construction loan facility, or TLA facility, for up to $425 million. The phrase delayed draw means they can take out money as needed over time rather than all at once, which is smart for a construction project. What is interesting is that this loan can eventually be converted into a term loan, which is pretty flexible. Finally, there is a revolving loan and letter of credit facility for $75 million. A revolving facility is like a credit card for businesses. It means they can borrow, repay, and borrow again up to that limit. This is often used for day-to-day operations like working capital or covering certain guarantees. So why this huge amount of money? Well, the primary goal is to fund the development and construction of this massive natural gas pipeline system. A significant portion of the money from the term loan facility is also being used to pay back Venture Global's affiliates for the money they already spent getting this project off the ground. That is a common practice to reimburse early investors. The revolving credit facility is more for keeping the project running smoothly day to day, paying for operational needs, and fulfilling any financial promises tied to the project. Now let's talk about when this money needs to be paid back. The biggest loan, the term loan facility, has a maturity date in September of 2032. That is a good amount of time, 7 years. The other two facilities, the construction loan and the revolving loan, are set to mature sooner in September of 2030. The good news is that the principal amounts outstanding on these loans can be repaid early without any extra penalties, which is great flexibility for the company. When it comes to interest, these loans are tied to benchmark rates like term SOFR plus an agreed margin or a base rate plus a margin. This means the interest rate can fluctuate a bit based on market conditions, but it is a pretty standard way to structure these types of loans. At the time of this filing, the entire $1.050 billion term loan facility was drawn, meaning they took out all the money right away. The construction loan was partially drawn and can continue to be accessed and converted into a term loan, as construction milestones are met until September 2027. The revolving facility can be drawn upon until its maturity date in 2030. And who is on the hook for all this debt? Well, the borrower Blackfin Pipeline LLC has two guarantors. These are Blackfin Pipeline Pledgor LLC, which is the direct parent of the borrower, and Blackfin Supply LLC, which is a subsidiary owned by the borrower. What this means is that these parent and subsidiary companies have pledged their assets to secure these loans. The lenders have a first priority lien on essentially all the assets of these guarantors. That's a really strong security for the lenders. It means if something goes wrong, they have the first claim on those assets to get their money back. This includes equity interests in the borrower and Blackfin Supply LLC. The agreements also include all the usual legal stuff like standard representations and warranties. These are promises from the borrower that certain conditions are true. There are also affirmative and negative covenants. Affirmative covenants are things the borrower must do, like maintain financial records. Negative covenants are things they cannot do, like taking on too much other debt or selling off key assets without permission. These protect the lenders and ensure the borrower operates responsibly. Now, this filing doesn't contain the full financial statements themselves, but it tells us they will be filed in a future quarterly report on Form 10Q for the quarter ending the 30th of September 2025. This is pretty standard practice for these types of events. They are also showing Exhibit 104, which is the cover page interactive data file. This is essentially a digital version of the report that computers can easily read. Looking at this filing from Venture Global Incorporated, it is clear they are making a significant investment in a major energy infrastructure project. The $1.55 billion credit facility shows strong confidence from lenders in Venture Global's ability to execute this ambitious pipeline construction. The structure of the financing, with a large initial term loan and flexible construction and revolving loans, suggests a well thought out plan to manage costs and operations throughout the project lifecycle. The fact that the borrower is Venture Global's joint venture and that the parent and subsidiary companies are acting as guarantors with a first lien on assets indicates a commitment to securing this debt. What is particularly interesting is the scale of the project itself, a 3.3 BCF per Dalton Y natural gas pipeline. This is a substantial piece of infrastructure that will likely play a key role in regional energy supply. The use of proceeds to fund construction and reimburse prior expenditures is a sound financial strategy. The company is essentially securing the capital needed to complete a vital project while also acknowledging and rewarding the early investment. However, there are always risks to consider with projects of this magnitude. Environmental impacts, regulatory hurdles, and fluctuations in natural gas prices are always factors that can affect the success of such ventures. The covenants in the credit agreements are designed to mitigate some of these risks by imposing restrictions on the borrower's activities. We will need to watch how Venture Global manages these and the progress of the pipeline construction in future filings. The company's direction seems to be focused on expanding its energy infrastructure footprint, which is a bold move in the current energy landscape. This is a pretty significant development for Venture Global. They are not just a company reporting numbers, they are actively building the physical infrastructure that underpins our economy. Securing this level of financing is a testament to their strategic vision and operational capabilities. Alright, that is our breakdown of this Venture Global filing. What is your take on these numbers and what they signal for the company? Future, do you think this pipeline project is a smart move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't you forget to check out the Discord in the description. We have a great community there discussing these reports. Thanks for watching. See you next time.